Hi, good afternoon. Welcome to the marketplace. Coming up, Fitch downgrades Ghana's borrowing capacity to restrictive default. We'll discuss implications. Also coming up, soybean farmers and aggregators in the northern region threaten to reduce production if government does not lift the ban placed on exports by May 15.
Without delay, repeal the export and import restriction of soybean regulation 2020 LI 2432 and lift the ban on soybean exportation to allow Ghanaian farmers to make money for their labor.
Reaction from an investor. Also coming up, the visiting World Trade Organization boss calls on African countries to work more on improving macroeconomic stability to support trading activities on the continent.
We get our macroeconomic management right in many of our countries. We bring more stability to all the currencies. Then it will become easier to trade.
My name is Daryl Kwawu. Thanks for joining us. Details coming up. Well, first up, Fitch Ratings has downgraded Ghana's long-term local currency issuer default rating to RD from CCC. It has also downgraded to CC from CCC and subsequently withdrawn the issue ratings on 5 local currency bonds issued prior to the domestic debt exchange program. Now, it attributed the rating action to missed payments on some of the local currency bonds issued prior to the debt exchange. Joining us is senior finance lecturer at the University of Cape Coast, Daryl Kwawu. Good afternoon to you. What does this mean for us?
These issues are not new to us because we have seen these downgrades before the debt restructuring. After the debt restructuring, we are witnessing same and further downgrades. What it means to us is that it will become very difficult for us to get the IMF bailout. It is also showing us that the country is not doing so much in terms of us working assiduously with the external debt creditors so that we'll be able to get the IMF bailout. And missing out on the IMF agenda for April tells us that there is a lot of work that we need to do in order to get the deal working out for us as a country.
Wow. Did you say it becomes difficult for us to get an IMF program?
Yes, it is going to be very difficult for us to do that because as we speak, the external creditor committee that is supposed to be formed to negotiate the deal with IMF, to negotiate our getting the financial assurance to present to the IMF for the bailout to be successful has not been formed yet. If the external creditor committee has not been formed yet, and that committee is very vital for us to get these deals, then it is something that we need to look at. And you look at the external credit rating agencies, they've told us that the debt restructuring that has been done has been able to achieve only 1% reduction in the total debt to GDP ratio, 1%. And we also heard of the finance ministry telling us that there is a need for other individual and institutional debt holders in the country to come on board. All this put together is telling us that there is a lot of work we need to do to make our debt sustainable and raise enough domestic revenue.
Are you still there?
Bailout is given to us.
Right. Well, because you mentioned that we may miss out on the IMF program based on our timings, I just want to bring up an article I also read today which said that that Ghana had missed some IMF meetings and that could affect our getting a deal by mid-May. Your thoughts?
Yes, so we have said it earlier when the finance minister said that by the end of May, they are going to get the IMF bailout. I am looking at the end of the quarter or beyond. So the minimum time that I will give for this to work out is the end of the quarter, so that we'll be able to get the deal out. But there's a lot of work we need to do. And if we are not doing that, it's going to affect whatever timelines that we are setting for ourselves. And we should face the reality. Time is running out for the country to get this particular bailout. And earlier, the managers of the economy sit down and be transparent with the country on what the difficulties are and how these institutional and individual bondholders will also come on board to help the country get the bailout, the better it will be for us as a country. But if we are not being transparent with the deal, and the credit rating agencies who have better information are giving us these signals, is not too good for us as a country.
Fitch cites uncertainties regarding clearing of missed payments of bondholders. I'm going to read portions of what we have. It says, following a meeting with representatives of individual bondholders and pension funds, the government announced having reached an agreement on a pathway towards the settlement of outstanding debt obligations by April 28. Now, this announcement, it says, does not clarify whether missed payments will be settled to all categories of holders of old bonds or only to these two categories. It raises concerns about issues to do with payments and how it's been handled. We've seen the government go back and forth with individual bondholders and pensioner bondholders. Your thoughts about how all of this is being handled and its impact on our ratings, really?
Daryl, as I was saying, all these things go into the ratings that we've had and the lack of transparency in the entire domestic debt exchange and the deal with IMF. If I were to be government, I would look at my policy shift, carrying the country along, because everyone that is in the country is needed on board to make this deal a success. And so if we are not carrying the country along and we are hiding things from the citizens, then it becomes a huge problem. You look at the issue with the 3 revenue deals that have been passed. It's one of the key conditions that must be met before we need to show proof that we are going to get that particular amount of money from within. The external creditors, yes, there was a meeting in the US, and then we've been told that they've given us assurance, but we've still not had the kind of assurance that is needed from them. And we now have the technical committee that has been set up from the domestic debt holders and the pension bond holders who have not tendered in their bonds for the new ones, to see to it that there is a way where government will be able to pay. Already there have been 5 major bonds that have matured. Their principals have to be paid. The coupons have to be paid. Government has missed out on all these funds, and there has not been any firm communication to the general populace as to when they are going to pay this amount of money. And that is very worrying for the country.
All right, my last question to you, still concerning our debt crisis. The IEA proposing imposition of debt ceiling of 60% of GDP and strict oversight by Parliament. How is that helpful? Is it the right way to go?
It's a suggestion that I will support wholeheartedly, because we don't have to leave everything to the executives to do. If we do not put up a ceiling on our debt and then we allow them to borrow any amount at any time, that will not be so good for us. So the call for that particular ceiling is in the right direction. And if you look at government's own projection, they wanted the debt to GDP ratio to be 55%. So if IEA is proposing 60% and they can ensure that that is properly executed, that will be the right thing. And then that will bring a lot of fiscal discipline, and to ensure that you just don't borrow at rates that are not sustainable, that the future generations will have to suffer for the loans that we take today. And so that call is in the right direction, and I wholeheartedly support the call.
Sarah Mkao, thank you so much. Senior Finance Lecturer at the University of Cape Coast. I appreciate your time with us this afternoon. Now, soybean farmers and aggregators in the northern region have threatened to reduce production if government does not lift the ban placed on exports by May 15. According to the group, the ban has caused the price of the product to drop solo, resulting in losses. Take a listen.
Became operational. None of these local buyers were able to buy soybeans since their processing plants are no longer in operation. So who does the government want us to sell to? The ban on export of soya has made the price of the commodity drop from 650 Ghana cedis to 400 Ghana cedis at the farm gate. This is how poor the farmer has been subjected to by this action of the government. Government should without delay repeal the export and import restriction of soybean regulation 2020 LI 2432 and lift the ban on soybean exportation to allow Ghanaian farmers to make money for their labor. If government truly wants to help local soybeans processing companies, government should provide them with funds to be able to buy and make cash payment for soybeans. 4. Local processing companies, government should resource the buffer stock company to be able to buy enough soybeans in the peak season and resell to the local processing companies at cheaper prices. 5. Government should identify farmers on government support and direct them to sell soybeans to the local processing companies. 6. Government should allow individuals with capacity to export soybeans to do so without frustrating them, to enable the industry attract the needed investment. As at now, investors are moving away from investing in soybeans production because of the ban on the exportation of soybeans. We call on the government to, with immediate effect, allow Ghanaian farmers and aggregators to trade in soybeans without restrictions. If government fails to heed to our call by 15th May 2023, we will not fight the government, but we will cut down the production of soybeans in the 2023-2024 farming season. This is not a threat, it is just information to the public.
Let's speak right now to Yao Edupoku, who is an investor in soybean processing here in Ghana. Good afternoon to you. Thank you for agreeing to speak with us. What do you make of the concerns raised by the soybean farmers and aggregators?
Good afternoon to your viewers. Thank you for having me on your show. What they are saying is partly true, but there is a deeper reason for what is happening currently in the system. We have been saying over and over again to whoever will hear us, and we are praying that this new minister for the agri sector will listen to us. Without soy and maize, the poultry industry will not be able to get up on its feet. That is the bottom line, because poultry is about 90+% feed. That is soy, which is 28%, and then the balance of 70% is maize. These are the two ingredients that make the poultry thrive. Now, we started soy at about 20,000 metric tons, 2004. And we brought it to 400,000 metric tons, and now it has gone down again. Reason is simple. Almost all who invested in the soy industry, I mean midstream processing end, have all gone down, including me. And we were the anchors for the soy industry. In came the Indians, who started exporting our non-GMO seed to India. Now, India is on the verge of self-sustainability. And so the market is not that interesting to them because they can now get their own soy. Why they still come here is because ours is non-GMO. That is why the Indians are still on our shores. But then, it is not actually the ban on export of soy which is getting us into this situation. One, we cannot use soy because soy has to go through a process. And the processes, the doors have been closed. All the processes are down, except I think one or two. So you cannot get the national requirement. And so the only alternative left to the farmer is to export. And the exporting country is India. They are the only ones exporting our soybean. And they are doing that because it's non-GM. But now I hear India is on the verge of self-sustainability. So that means that they will need our soy. The way out is that we should, as a matter of urgency, if we are looking at our nutritional requirement as a country, be able to revive the soy industry, not from the farmer end, but midstream, making sure we have about 5 well-functioning soy mills that will then require the farmer to grow and expand. Then the farmer has an anchor buyer, so they don't have to fret about who is buying from them. With this, the poultry industry then will have a leg to stand on because soy cake will be available to be mixed with the maize plus the chemicals that they need. Immediately overnight, we will see a revival in the poultry industry. Now, it's a boomerang effect or a chain effect. Because the midstream, that is the processing end, has collapsed. Farmers don't have a market. And poultry farmers don't have the means to feed their chicken. This is where Ghana finds itself. No matter what anyone say, no matter how many round conference tables that we do, without us sitting down to look at it, as I'm saying, we will be wasting everybody's time, including the government.
Okay.
This is where.
Yeah, and I get you and agree with you on us reviving our soybean processing companies, but that looks like it's going to take some time. But in the interim, the farmers say they're incurring losses. Wouldn't it make sense to lift the ban so they can sell off what they have at this point?
The point is that it's not about the ban. I work with the Indians. They are not buying. They can get the certificate to export. Though there is a little bottleneck at the ministry, which we are working on. The point is that do India need our soy, or do the world need our soy? That is the question. So we are not producing enough to catch the eye of the major buyer. It is a niche market that we created for ourselves because it's a non-GM. That is what it is. So it is not a matter of time, as you are saying. Setting up a factory is maximum 6 months. And then the factory will be working. And once the factory, well, let's say we are in April, by December, we can get the factory up and running so that the poultry industry will immediately be revived. It is not a matter of the farmer not getting a market. There will be no market if there's no end user. That is where we are. So we should not push the problem to the exporter. That is not it. And I stand to be corrected. It is not the exporter. How come the volume of soy has decreased over the years? Because all those who went into soya processing have gone down. In going down, it affected the farm. That is why our yield has gone down. A lot of us have moved from soya into rice and maize.
Okay.
So that is now holding on, cannot get the market. This is why,
I don't know if there have been any discussions about revamping soybean processing factories, but I do get the sense that it's something the government is really keen on doing.
You see, we've made overtures to the government, and we'll continue to do that. That It is not about soya farm. It is about the nutritional need of the populace. That is what we're talking about. This will cut down on pharmaceuticals. It will cut down on our health needs if we are able to produce the needed nutrient for the population. And so it behoves the government to put in a little fund to get at least one sector running. We've been saying this. Nobody is listening. How much do we need to put in the sector for soya? I can tell you here that we don't need more than $300 million US, and the soya industry will be thriving, and the poultry industry will be up and running. How much did we put into the banking system? How much? This tells us where our priorities are. And now, we are net importers of everything. Even things that can be done here, we import. And we don't have the dollar because we don't produce the dollar. This is what is happening.
Okay.
So please, it's not a matter of we not getting exporters to buy our soy.
I just have 30 seconds, and I just want to ask you, so should the soybean farmers follow through with their threat to reduce production? Do you think it would have any significant impact?
The truth is that they will just go extinct. I'm telling you because I'm part of it. As I'm talking to you, I'm experimenting with organic soya with a group of investors. We are all going to go extinct because nobody cares. The whole point is that none of the poultry farmers are buying Ghana soya cake. The market for the Ghana soya cake is not even up to 10%.
Wow.
All the poultry farmers are importing. They are importing the cake. You see, we take the raw material to India, they extract the vegetable oil out of it, and then send us the cake, 3-4 times the price, and then the poultry farmer buys it. That's why you cannot buy local poultry. This is what is happening.
Okay.
If they threaten that they are not going to, nobody will care. Because the poultry farmer will still import the cake anyway. And it is the soya who will be found wanted.
It was quite unfortunate that this is the outcome. Thank you so much, Yao Edupok, for speaking with us, soybean investor. We'll keep the conversation going. But time to talk tech next. Interesting article on Technova GH website about DVLA's decision to pause implementation of the digital transfer fee. Is the article there asking if it's just a distraction for a later rollout. Lead Eyes of Africa, Henry Kobler, joins us to discuss this. Good afternoon to you, Henry. Is that a question to consider? What's the basis for this question based on the writer's perspective?
I think that over the last weeks, we have had a great public outcry on how digital people like Yango and then Uber are basically now rolling out the digital fees. Now, I mean, the outcry came in at a point where everybody now just realized that this came from a DVLA directive, and it was sort of starting to implement from 1st April. Now, the point really is that there has been that pause from DVLA's point of view on this, and then we're still seeing that some of the ride-hailing services are still implementing the fees. Now, the outcry, especially for tech enthusiasts like me, is to look at how exactly is the implementation of such fees going to impact how the adoption of these technologies is going to be. Now, the second point really is that what is the oversight of this fee? Who is really looking at how this fee is implemented and how much is basically going to come in? Is there a direct declaration of this value, or there's a supervisory technology that is going to be over the finances of these ride-hailing services to be able to check if these fees are sort of coming in at a value which they can sort of declare directly? And that becomes one of those major points which we are actually looking at. And so if these pointers are not in place, and then the implementation of such fees is in, whether it is paused or whether it is now a hidden fee, which we can't necessarily see, becomes a very big issue for us in terms of finances in the ride-hailing point. And so those are the questions that we're sort of asking, and it's actually very important that we sort of get some level of answers to these questions.
Well, we've not received, we've not heard anything since DVLA announced that was rolling back those charges. Like you point out, we don't even know whether they are hidden charges right now. But do you think they would come back again to reintroduce those charges? What do you think? What's your gut feeling about this? And what's the practice in other parts of the world? I'm just wondering.
My feeling really, is that, it's really going to stay. So we're going to have the fees coming in. But the point where I get a lot of agitation is that how is DVLA going to have an oversight of how much is coming in through those fees? Do they have a technology API connecting to the finance point of these ride-hailing services to be sure that as much as they are declaring the values that are going to come in, that is going to be the right values? Because this is a tech company. Are you going to point into their books? How are you going to now supervise and be sure that you're actually going to have some level of oversight on it? I mean, for me, that's one of my major points. Whether it's going to come in or not, I feel that usually when such authorities, especially in Ghana, as we've seen, make up a point to say want some level of revenue from a particular source, they actually go in, like the e-levy. I mean, we spoke about it, we cried about it, but it was still in. And so having DVLA put some one CD on rides really is not going to be a big deal where we have to now cry so much about it. But my point is that how are we going to see how much is coming from that point? And that's one of my major concerns.
Yeah, accountability. But in terms of patronage of ride-hailing apps, do you think it is going to have any potential impact? Do people really care about these things now?
People do care about it, but I mean, if you need the services, you would ignore it. I've sort of had to psych myself over e-levy and pushing money in and out every time. I mean, I don't really care about it. It's sort of part and parcel of me. And so, yes, you're going to have it impacting level of adaptation in terms of the technology, but I think that for the use of the services, you're going to see an upsurge of it as well, because technology is really coming to be part of us and we can't take it away. And so you're going to cry over it, but we're going to still have to use it.
All right. Thank you so much, Henry. Always great to speak with you. Henry Kobler is lead for Eyes of Africa. Joins us every Wednesday for Tech Talk. Now, before we go, some quick news update on the visit of the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. She's urging African countries to work more on improving macroeconomic stability to support trading activities on the continent. According to her, it will take more years for the continent to have a strong currency to match up with the American greenback. Speaking at a forum held by the Institute of Economic Affairs, she called for strong platforms to ease intra-Africa trade activities.
In order to have another currency that matches it, you need that level of confidence. And that means you also need that level of stability in the economy of that country. So it will take a long time before we find currency. I'm not saying it won't work. I'm just saying it will take time to find another international currency that engenders that level of confidence.
All right, and that's the Marketplace. Everyone, thanks for watching. My name is Daryl Kwawu. We'll be back same time tomorrow.